Let's go to the banana hunt charts that were changing up a little bit. Here's the pairs of stocks. This is the UNG, the natural gas fund. And you could see on the right hand side, UNG was way below the banana line. So UNG is moving up. UNG is moving up to the banana line. It was 38% below it. Morning, Leon. Can you hear me? This is Steve with Above the Green Line. On the left-hand side is a UNG chart that's upside down. And you can see it's hard to see the banana line, but it's way down there. So UNG upside down chart is coming down. In this case, you'd want to buy cold up here where it says buy cold fund. You wait for a red candle, but not till it turns down. Can you see that chart, Leon? So, so the purpose here is to find funds that have a big wide spread that are way above the banana line. So the one on the right was way below it. The one on the left was upside down, and it was way above it. So that creates opportunity. So George uh, has banana hunts down on the left, down to the banana line, and the one on the right up to the banana line, UNG or Boyle. Boyle is the leverage. Now, if we go up to Tesla here, Tesla has had a big rally recently on a 60-minute chart, and it's now above the banana line. On the right is the Tesla 60-minute chart. There it is. And on the left is Tesla upside down. So that one's below. So this is designed when you get the Tesla long fund, the one on the right, when it goes into a red candle, that's a sell signal, short term. So you'd want to sell it, not be in it when it's in a red candle. And target would be the banana line down here. And then on the chart on the left, it turns red, then you would buy the inverse fund TSLQ. But Tesla doesn't have a big wide spread like it did a month or two ago. A lot of stocks have returned back to normal. Let's see, one that still does is Palantir that's coming up here. And Palantir is way above banana line because it's had a huge rally. There's a delay, so I'll let these charts pull up. You can see Palantir is like 122, 124, and the banana line's about 93. So it's way above, and PLTD, the inverse fund, is way below. So George is waiting on a M pattern on PLTR and a W pattern on PLTD. There could be two banana hunts there, one up to the banana line and one down to the banana line. Leon, do you have any questions? Some like the bond funds here, TMF and TMV, they've recovered back to normal to the banana line, so there's not as much easy money to be made. Yes, PLTR needs a double top, but it did make a higher high, so you have to wait for it to come down and then go back up again. So don't expect a big drop on PLTR until it double tops. Next is the S&P 500, and it's returned back to the banana line, and it's actually a little bit above it here. And then SH on the right is the inverse of that. It's below the banana line a little bit. So the important thing to know is that with all the fear last month, S&P did meet again with the banana line. It did have a W there on the SPY, and it had an M pattern on SH fund. And then coming up is the NASDAQ 100 QQQ. It also had a W pattern and return to the banana line. Now it's a little above, and the inverse QQQ is a little below. So stocks are more normally valued now. They're not undervalued like they were last month. And the semiconductors are up next, and they're basically on the banana lines. They were way below last month. Bitcoin coming up next is overbought. So there's two funds, BITI and BITO. So if you look at the Bitcoin fund, BITO, it tells you that Bitcoin is overdone and be cautious there. Don't keep buying it when it's way above the banana line. And when you see a wide spread where both of them are way above or below, it's probably looking for change in direction. So probably means Bitcoin's going to pull back some. Anyway, the purpose of this banana hunt, these pairs, is to scroll through them, look for ones that are wide apart, and that creates opportunity. Right now, a lot of them are more normally valued. Coming up next is Apple. Apple was way below, like $50 below the banana line, and it just hit it on Thursday. So it's more normally valued also. These can these can be found on the dashboard, and these green link boxes here. You scroll down here to day trading, and there's a strongest stock charts and then the banana hut charts, and that's where we were. So so scroll through these banana hut charts if you're looking for ideas. Wide spreads is the goal. Here's the upcoming swing trades that are on deck. First one is this UAMY, and it hadn't quite hit the green zone, so we can't buy it yet. It's still sitting up there pretty high. So we're waiting for the stochastic to come down to the green zone, which hasn't happened yet. It's Hertz Global. The car rental should be a good one. It broke out last week on huge volume, and it's in the green zone, waiting for a turn up here, 99 SCTR rank. So if it can turn up in the next couple of days, it should be a good one. Right, right back up to test the high. You can see the you can go to the 60-minute chart right below and wait for a green candle there. Right now it's a red candle, so don't even, it goes from red to blue and green, so wait for to turn green or at least blue. When it breaks this blue downtrend channel, buyers should come in. It's normally going to retest the high. Uh, this blue square up here, maybe double top then. And the gold miners have been very strong. They are correcting right now. So we're waiting for GDX gold miners to go back into the green zone so we can buy it. Right now it's still up there. I'll wait for the chart to come up. GDX just made a high, so it will normally retest it. If it doesn't make a high, that would be an M pattern. And then George the monkey would sell it, but it's too strong right now to sell. Uh, and we're just waiting for it to go back up and try the high again. This is a corrective wave. We're profit taking, but smart money is going to get back in it once it quits going down, once this correction is over, the blue downtrend line. You can scroll down to the 60-minute chart, and here we're waiting on a green candle to buy it. Plus, it has a blue downtrend line. So before buying it, make sure it breaks the blue line and turn into a green candle. You can see the long correction for about 6 days is very orderly and not steep at all. Whereas the impulse wave 2 weeks ago was much steeper and went up faster. That's the difference between an impulse wave is the power move with the current, and a corrective wave is slow decline on lower volume. So if you want to get in before GDX pounces up, you just watch this one. It's getting close there. Let's see, the people ask about the S&P and the QQQ, but they don't have enough SCTR rank, so the only ones that do are inverse funds. The small caps are the weakest. So this is an inverse small cap, so it's the strongest inverse fund. RWM just made a high. It's correcting and hasn't lifted off yet, but if you look at your Bollinger Bands here, well, let me catch, it's at the bottom Bollinger Band, it's in the green zone, just made a high, it's got high relative strength, and it's still correcting though. So it should go back up again, and then if it doesn't make a high, the market could have a good rally. But most likely this one will pop up here somewhere, and we'll see how strong the bounce is. If it's not strong, it means the stock market is ready to be bought. And here's a 60-minute coming up. Waiting, same thing on a green candle. Don't have one yet, so it did turn blue on Friday afternoon. So you also want them to get a minimum above the pink line here on the 60-minute chart. Any other questions there? Coming up is the S&P SPY chart, and it's had a big rally from the low. It is in the red zone, and stretching out, the volume is not high, but doesn't seem to be any sellers right now. I'll go to a weekly S&P so you can see about where we are on this rally. Here's the S&P coming up here. The problem if you're wanting the S&P to the problem if you're wanting the S&P to go higher is that the stochastic on the bottom, it's no longer overbought. It's getting oversold. I'm sorry, it's no longer oversold. It's getting overbought. So you might have another week or two, but not only that, it must make higher highs here, and the probability of that happening is not that great since it's already lifted off so much. Here was the Elliott wave count I had a while back coming up. Not sure this is correct, but you can see the big move into December and January was probably wave 3 up, and then we had a big correction, and this could be wave 5 up. So I'm drawing some blue squares to indicate the highs. There was a high in January, and then a dump down to almost the banana line, and now it's going back up. So it needs to make a higher high, otherwise you're going to have an M pattern. Coming up is the monthly chart, and you can see where it made a high in January, dumped out, now it's going back up. This is where the M pattern would be more important. So a double top here, or even a lower high, if it were to roll over in the next couple weeks and not make a high, that could cause some heavy selling, because this is a parabolic curve, and some people have trouble visualizing it, but I'll draw it here for you. You want to buy investments that are coming out of an indecision, a sideways base pattern. This was back in the last recession, 2008 and 9. Stocks got cheap. They went sideways for a while. And then the Fed started printing money. Congress started borrowing money. So trillions went into the economy and made the stocks go up. The stocks went way up. Stocks went unbelievably high, and that's why they're so far above the banana line. But the S&P does not have an M pattern yet, so George cannot sell. So, but if we do get a lower high here and roll over, that would be a sell signal. We know where the long-term banana line is. It's way down here, and most people think it can't do it, but it can actually very easily, and it will, because just like Warren Buffett, stocks are 2 times the gross domestic product. Warren Buffett buys at 1 time. So that basically means Warren Buffett's going to buy again at the banana line, which would be 1 times GDP. And all it takes is fear, big fear, not a little sell-off like we had from the trade war. I'll show you some stocks that are already have already reached that objective. Here's one we've been trading. SC, which is C Limited. It's a gaming stock. And if you believed in Pat, if you'll refresh your screen, it should change for you. Refresh your browser. On C here, you can see it went parabolic in 2021. If you believed in the banana line, which I do, you can see how it's so easy to make money here. People buying C at 3 times the banana line, they're going to lose big money. They did. You would have bought it down here in 2024 at 32 bucks, and then it tripled. And the problem with companies, they can go broke. But if you knew C wasn't going to go broke and you bought it way down here, you would have made good money. Right now, it's a little bit overbought, but it's still one of the strongest stocks. 95 relative strength. It's near highs today. Here's next is SH, the inverse fund, and it's 300% below the long-term banana line. So people are going to be shocked, but it'll probably go to the banana line here in the next year or two. We're probably going to have a recession coming up. Nobody wants to hear it, but that's what the banana line says. This thing's cheap. Nobody's in it, and it could go back to 500 bucks. Here's one that's a darling a couple years ago. Skin coming up. Pat, did you get it going there? Skin could go broke. It was the darling. You can see the banana line's way up here at 9. The stock's at 1. And it doesn't have any SCTR rank, but these are the ones we'll watch and wait for a base. If I draw the base here, be something like this. You want the stage 1 base to be making a 52-week high. Something like that. So when it first you want it to cross the green line, which it's not. You want the red line to cross the green line also. You want the SCTR to go. You want it to be making a high. So none of these factors, there's no rush to buy these because they're dead money. But anyway, that's an example. If we knew skin was going to make it, then you could make, unbelievable return. But these are the kind you put in your list and watch them periodically to see if anything's happening. It's like watching plants grow. You got to be patient. SMCI was the darling coming up. AI stock story and 1,000% above the banana line. And then a year later, it went back to the banana line. Now SMCI is basing, so it's kind of dead money. So we're not no relative strength, nothing happening there. But it's a good example of what happens over and over. Parabolic curve ends terribly. Generally, they drop 40 to 70%. This one dropped 86%. Just flushed everybody out. Pat asked about skin above $5. $5 on skin would be the top of the base. So it's probably just going to bang around between 1 and 5 for a year or two, which some people will trade, but we're not going to trade it till it meets the three green line rules. High relative strength above the green line and above the 50-day crossing the green line at a minimum, but none of that's happening yet on skin. But if you wanted to win a trading contest, you could buy it, and it probably will meet with the green line, but we don't know if it's going to survive or not. That's the only risk. Coming up is the semiconductor fund, and it's clearly parabolic. Everybody got in semiconductor. This is SMH. It broke the parabolic curve and dumped pretty good recently. The SCTR rank is 12. It's pitiful. Most people are still married to the semiconductors. They're dead money because everybody's in them. The banana line's at 66. People are buying it at 220. And that's how you lose a lot of money. You can see these should have been bought back here 15 years ago in the stage 1 base. And guys keep saying, oh, buy it on pullback. These things, once they go parabolic, they can get like skin. They can just get totally destroyed and lose not only tremendous value, but be dead money for many, many years. Cisco went parabolic in 1999, and it's still the same price as it was back then, 25 years ago. Here's Pat, if you go to insider trading on the companies like Skin and go look, if you start seeing the insiders buying big chunks of it, that's a very good sign that something's going on. That's public information. Just go to type in insider trading in the symbol and you can see. That's one of the first things you'll see, but I'll just watch the relative strength, SCTR, and until it gets above 60, nothing's happening at all. Look for above 60 and high volume starting to perk up. Maybe we can find one here in a second. But you can see where, let me draw it for you here. If you want to make doubles and triples from now, you're going to have to find stuff coming out of a base. Like I've marked here, coming up, you'll see it. A base is a period of indecision. People can't decide if it's going broke or not. This was semiconductors. We were in a recession. Everybody's worried that the companies were all going under. Instead, they decided then the Fed started printing money, so the recession ended, and semiconductors took off. And they went so high because the magician comes in and says everything's great. The banana line says, well, it's not that great. Smart money realizes it, so they exit. and the herd's getting stuck with these ridiculously overpriced stocks right now. Here's a good example coming up, Snapchat, and I'll wait for it to catch up. Pat, you could look at Snapchat for a candidate, but the SCTR is only 4. The volume is picking up, and it wouldn't be surprised me that somebody does buy them, but maybe not for a whole lot. And the banana line has come down, starting to come down pretty fast. So they have kind of a growth. They're not growing, I don't think. So it's hard to get people interested in them. But these guys can come up with something new, and they can become hot for on a story and get going. But there was huge volume this week, but that was bad news. Here's the coming up is the SOXX, which is the semiconductor fund that the ones traded on chat, SOXL and SOXS, the long and short triple funds. Everybody still loves SOXL. The problem with SOXL is the root symbol. Here, this chart has a 5 relative strength. So buying SOXL, you're buying a stock that's really super weak, and it does move good daily, but you don't want to get stuck in that thing because it's super weak now. Some of the auto stocks are getting cheap. Coming up is Stellantis, which is Chrysler and Ford and Chrysler, Fiat, and Jeep conglomeration. It went parabolic in last year, went to 23, and it's already dropped 69%. So this one is undervalued. It just had a nice little bounce here, but this is probably the middle of an M. It's hard to see there. Leon, for a long-term breakout, you really need more than that. You've got to meet all 3 green line rules. Above the green line, above a minimum of 80 relative strength. I'm just telling Pat to, if you want to find them before they break out, look for them above 60. But you want a breakout to be on huge volume, making a 52-week high, and above 90 relative strength, preferably. Not, but you don't miss them because they go sideways forever sometimes. You don't have to be the first guy in. But if you're a Warren Buffett guy, you're looking for value. And the banana line here says Stellantis is undervalued. It's at 13. Let me draw this here. The stock, yeah, it was 7. So So if we knew, oops, here we go. So this shows last month Stellantis was 82% below the banana line. And that's kind of stuff if Warren Buffett was still doing the type of investing he used to do that made billions. He doesn't do it anymore, but he would buy this down here at $7 or do what's called accumulating. He'd buy it from time to time and load up, just keep buying it. And so if you knew nothing except banana line, you just buy it and wait because it's worth $13 according to banana line. But we have trouble believing it will go there. But they do. Well, an individual stock can go broke, but the odds of this going back to banana line is very high, probably 70, 80%. And that's very good reward. If you could make 82%, you would do it. We don't teach that style because most people don't have the squirm factor to handle it emotionally. That's the main reason. Otherwise, we just say, let's buy bananas, stretched out bananas, and people would make damn good money. But it's too emotional for most people. George the monkey doesn't know it. He just buys stuff that's undervalued. Just like Stellantis was 23, the banana line's at 13. You go, what the hell are these people doing? But that's how it works. Hi, G man. Welcome. So Stellantis is one, Ford is another. Auto stocks are cheap. They're discounting the upcoming slowdown. Typically, these go down before the recession. And when we go into recession, people sell their Stellantis when it's too late. They should have sold it, 23, and then they're actually probably going to be one of the first ones to break out. Everybody's scratching their heads like, why is that? And solar stocks are cheap. Coming up is TAN, the solar fund. It went parabolic. Everybody bought it in 2021. It was the darling story. Magician sucked everybody in at 120. Now it's $30 and everybody's out. Banana line's at 60, so it's got 100% gain potential. It's not ready to buy on us because it's got a low relative strength, but Warren Buffett he didn't buy on relative strength. He would check the fundamentals, but he would just buy undervalued stuff and wait. He would wait though a minimum of 5 to 10 years. People today aren't willing to do that. That's why they don't make the big money. But you can see this is still in a stage 4 bear. So these will bottom out, and it doesn't take that long once they start bottoming, the relative strength firms up. Next one coming up is Teladoc. This was a darling COVID stock, $300, and I don't. They looks like they don't have much business, but it's cheap. The banana line's at 38, and the stock's at 7. So volume is picking up here, and let's see. But Pat, you could start watching this one. I don't see much going on. There's some volume here. This one is getting, like dirt cheap. That's where you can also go to, if you click on click on symbol summary at stock charts, let's see, it's Teladoc is selling under book value. So book value looks like it's about $10. That means they could liquidate the company for $10 and the stock's selling for 7. When a company's selling under book value, if they don't recover soon, somebody will buy them. And this is the kind that we're starting to see that some of these cheap stocks get, let's see, oops, some of these cheap stocks get way undervalued and then they get acquired by somebody. Okay, there we go. Okay, back to Teladoc. That one's one that is stock selling under book value, Pat. You might want to watch that more closely. Look for insider activity. And this one could be the insiders are starting to buy it. And Pat asked about the SCTR rating. On this one, Teladoc, the time frame is pretty accurate, whether it's weekly or monthly. We use the bottom number, the MA31, that's a 1 year average of the SCTR because it doesn't move around as much. So it is starting to, if you can see it now, well, you can't see it on the chart. The bottom SCTR number, there you go, is starting to turn up there. That's the 1 year average. See how it's turning up? The other one, the top, the less dark one, the non-blue one, dipped back down again, but the long-term relative strength is actually firming up, which is a bullish sign. And this one, I don't know what they're probably not, their sales are probably flat, but a competitor will probably come in and buy them just to get them out of the way. It's so cheap. For instance, it was what, $300, and so it's less than $1 billion in value. 4 years ago, it's like $40 billion in value. It's just ridiculous how low this thing is, or how overpriced it was before. Here's the S&P upside down coming up, and sometimes it's useful to pull these up. Yeah, Pat, if you can watch that, and let us know how it's going from time to time. But on the S&P chart coming up, it's still curving downward. So we know where the banana line is at 250, and it's down here. This is upside down again, but if this thing were to do a W down here, then it could start moving up to the banana line because the curve won't go. Once a curve gets going, it has a climax, and then they tend to change direction. Let me draw this. One thing that's bearish about this rally we're in, SVIX is the greed indicator, and it's bounced very little. Normally, in a strong market, this thing would be back to the green line in a heartbeat. Well, y'all know SVXY more. That's the next one. And it's not even back to the 50-day average. And that's unusual. And the same thing, the VIX, which is the opposite, the fear index, has not come down that much. So that's a warning that people are not buying call options like they were in normal cycles. They're really tentative. The next fund is the bond fund, TLT. They went parabolic during COVID in 2020, 5 years ago. Everybody got in them because CD rates were zero. So everybody was told bonds were safe, parabolic curve, and then they dropped 50%. Who would have thought bonds, what the magician said they were safe, would drop 50%? And they did. They flushed everybody out. You can look at the banana line. They paid 150 for them. Banana line was 110, and then they dropped down to 75, way below bananas. Right now, bonds are in stage one base. They're a little undervalued based on the banana line, but they're really going sideways, so that's why we're not trading them. There's no relative strength, nothing happening there. Bonds would go up normally in a recession, though. So if you see bonds really firming up, it probably means the economy's really gotten bad. But they haven't been going up lately, so not sure what they're telling us. They're actually telling us, since they're below the green line, that the economy's not dead. Either that or the too much government debt. Crude oil is weak, and that's generally an indication that the world economy is bad. According to this fund, USO is undervalued, and it could actually double to the banana line. Oil looks like it is cheap. Banana line's at 157, the stock's at 64, so yeah, it's getting up there. So on this one, we would wait for a breakout above let me draw the line here. Actually, this is a nice base. I didn't realize it'd been this long. It's been in a base now for 5 years since COVID. So, Pat, if you're looking for a breakout, about 92 on USO, it has no relative strength at all, but that's a very tight sideways pattern. So a decision is going to be made. It's either go into recession, it's going to go lower, or world economy picks up, this should blow out, and it'll meet with the banana line. So I'll start watching that more closely. The next one coming up is the VIX volatility or the fear index. It's holding up very well, and if you're long the market, you might be concerned because it's back down in the green zone, and the VIX, uh, this index still is in a bull market now. It hadn't been, it's been sideways forever. Usually, once the market rallies, this thing will be back at 12 bucks again, $14. Instead, it's sitting there at 22 in the green zone. And if it turns back up, it could go back to 40, and that would cause a market dump, or that would normally mean that the market's going to dump again. Next up is the tech fund XLK. Made a high last quarter, dumped to the banana line, and now it's going back up. It needs to make a high. Probably won't on this run because it's coming from too far down. So, and the stochastic's already 73, so it's running out of time. Usually you get up here in the 80s and smart money starts distributing. So that's what's for 15 years the XLK has continued to make higher highs. One of these times it'll have an M, and then smart money will say, well, that's it, and they'll get out. I'll show you the bigger picture of that. It's obvious on this chart. Here's the 15-year bull. If you can't see a parabolic curve in there, then something's wrong with you, because that's a historic chart. And we'll look back in the history books and say, my God, didn't people see that? And I wondered why AI doesn't talk about parabolic curves, but basically AI has to be trained, and AI doesn't understand, or when I ask it what it means, it doesn't seem to have a decent answer. But I know what it means. It means that every last person gets in it. It's a climax, and they don't end well. Let me see if I can go back to the last one we had like this was in 1999. I don't know if it'll go back that far. No, but you can see the base here way back in the sideways period. Here's coming up is natural gas, the commodity, and it's been going sideways. It's undervalued, um, and we've been doing UNG. Still can't get going, but this natural gas commodity has been going sideways since for over 2 years now at a base with a high of 10, and it's at 3.5. So natural gas is sideways, which means indecision. We're waiting for a decision to be made, and it hadn't happened yet, but the herd's not in natural gas, so it could just back to the old high as a triple and creates opportunity, but everybody else wants to buy Apple, which I'll show you that here. It's definitely parabolic. Everybody's in it. The banana line's at 70, the stock's at 200, and this isn't going to end well. Apple's worth 3 trillion. There's no way it'll stay up there at that value. It just lost $1 trillion in value just on this little scare about trade wars. You can see the relative strength's down to 19. The bottom one, MA31 relative strength is 54, which is stronger. But if you take the rate of return for Apple or any NASDAQ big cap stock, they're up over 1,000% in 15 years. And to expect that to continue is just not realistic. The yellow line, the banana line tells you where it should be. I mean, this is just a gift for those that capture these gains. Most people won't. Most people buy up here in the curve, which is where the climax happens, and it's like a vacuum. It sucks everybody in, and then it's over. And let's see here. Oh, the next group, you're looking for something of good value. Chemicals. Archer Daniel is a big chemical company. It was a darling. I mean, old chemical company blowing out in 2022 to $91, way above bananas. And now it's way below bananas. These are another one like autos that discount a slowdown coming. So these are coming down nicely, nice stage 4 bear market. And got to flush everybody out here, which they're doing. The stock's well below the banana line. So you're looking for value. Chemical stocks are undervalued. They don't have any momentum now, but we traded Archer Daniel and ALB a couple of years ago because they were, unbelievable. A chemical stock blowing out, but that's what happens. They all have their day. That's clearly in a stage 4 bear. Then it'll base, rinse and repeat, do it all over again. I'll show you. Yeah, here's this ALB. We did this one 2022. It was in a stage 2 bull. Wait for it to come up for you. Way above banana lines. Went to 324, banana lines at 80. And people paid triple that for a chemical company. It's unbelievable. And now it's dropped from 324 to 60 bucks. Talk about giving it away. Anybody owns some ALB, you can, um, well, it still hadn't come up yet, but you can see how low. It's the same cycle. It's just like a wave. Base, boom, top, bust, over and over. And people never learn on this stuff. People ask about AMD, and it's getting fairly cheap, but it has had a couple of corrections, these pink lines that come up here in a second. AMD is half price, so it's good. So AMD could burp up again, maybe go to 150, but right now it's not on our radar because it's only got a 4 relative strength. So, but breaking those pink lines, there could be a trade there. It's on the bottom Bollinger Bands. This is a weekly chart. The base was really down here about $4 though. So this is all one cycle. Here's yeah, that's on. AMD is a little bit undervalued based on the banana line, but coming up is Broadcom, the darling for many years. It's well managed, and it's definitely parabolic. But it did make a high, and now it's going back to retest it. And if it doesn't make a high this time, look out, because I'll wait for the chart to come up. That's the weekly chart. And then I'll pull up a monthly chart, and you can see how it's just curved up like a missile. And it's worth, like, I forget, 40 General Motors or something like that. Most people have never heard of it, but it's a story stock. They're making good money, but it's just overpriced. This one doesn't have a banana line on a monthly because it's not old enough, but If it did, it'd probably be like $80, and the stock's over 200. But this kind of pattern is definitely not sustainable. This is where you start looking for insiders, and they're coming out of this like crazy. People that work there are selling all their stocks because people tell them what's happening. See the curve on that? That'll be in the history books. It's classic. It's how people lose a lot of money. And then coming up is Boeing. Boeing went parabolic, believe it or not, in 2019. Went from 64 to 435. It's a pretty good move for an airline manufacturer. Parabolic, 435, then it dropped down to $89 a year later. Textbook, right down to the banana line. So the point here is if you just learn to follow the banana line, it's pretty easy. You don't buy a stock that's 300% above it, and you don't sell them down here when everybody's dumping them. See the parabolic curve on Boeing there? Just that's where basically where Broadcom, the one we looked at previously, is that's where it is. It's just setting up for a big dump, and then the smart money goes on. Then the magician says it's bad, and rinse and repeat. Then we got Brookdale, which is a nursing home, an old company. It was a darling in 2015, long bear market, trading at 7, breakouts at 9, banana lines at 14. But I don't think they figured out how to make much money. But back when they went public, I'm sure they talked about how nursing homes are the wave of the future, and people paid $38 for it. Now the future wasn't good, it's cheap. And one of these days it should break out. They'll probably get acquired because I would think they own a lot of the property. But that's one path that we're waiting on. Relative strength of 83. Um, some volume picking up there. And you could look for insider buying on that. Here's BlackRock coming up. They steer the market. BlackRock, 3 firms, manage about, I think, 3/4 of all the mutual funds. And it's sort of a barometer of the economy or the stock market. The thing to notice here, the SCTR is down to 43. And the reason it's low is because distribution, smart money's selling into the strength on this. So even though it's going up nicely, the rate of advance is not that fast. So it's deceiving. The chart looks good, but the relative strength, you got a whole lot of sellers coming in to overwhelm the panic buying. And they're selling it because the banana line's at 400, the stock's at 1,000. This one just needs an M pattern, and that thing could really drop. So if this thing doesn't make, this will be one to watch. If it can't make a new high on this rally, and everybody's waiting for the trade war to end, but this is more than a trade war. If BlackRock double tops or makes a lower high, then it's not a good sign. We know the market's how it's going to end. It's going to go to the banana line. So whatever causes it, George the monkey doesn't care. If he sees a double top or a lower high, he's going to short BLK and wait for bananas. And that's So you can fight it and hope and whatever, but that's how it ends. Here's one of these. A lot of these fad stocks, like charging stations, Blink, they were the darlings, and these really didn't have a business plan. They just get a bunch of government money. But if Blink makes it, and I mean, it's really cheap. The stock's, what, at 75 cents. The neat thing about these is if they do survive, you can buy them down here before they take off. And say it breaks out at 5, it could go to 10 easy. But right now it's just bleeding away. So they might not make it, but it's kind of like Hertz. They did break out, HTZ and that, but it did break out, and we're waiting to buy it probably this week. But these are the kind that if they do survive, you can make so much money on those, because if it survives, it's probably going to go to $20 again from 75 cents. Here's next one is Berkshire, and you can see it's parabolic. It is one of the, I don't know what they're doing to be on highs. They must be hedging, because it didn't drop at all on this pullback. Either that or they loaded up on the defensive stocks. Like, notice Philip Morris is on highs, so they buy that stuff to weather out the storm. The marijuana stocks are cheap. This was Canopy Growth, still basing down here. CGC. CGC did 43 million shares last week, so something, you know, could be accumulation. I don't know enough about them, but if they survive, the upside is so ridiculously high. Pat, this CHGG could be a good one later on this year or next year. Uh, it was one of the COVID darling stocks. It's like under $1, and the banana line's at 18. So if they survive, you have to watch them. It needs to get at least above. It needs to get above at least 272. But it's amazing how everybody had to have this one 4 years ago, and now they've given up on it. I think it's a, I don't know that you learn online, but you could look into it. And the next one is Carvana. George loves this one because it's Carvana's going back up here. Right now it's 128% above bananas. Um, 2 years ago it was 2,200% below bananas, and it returned. In 2021 it was 400% above bananas, and it returned. So if you came here from Mars and you saw the banana line, you'd be going, you guys are missing the boat here. And you sell it above, you buy it below. How simple can it get? But people have to, they don't believe, and that's what makes it hard. But if you believe this, like people buying it up here way above bananas, Carvana's probably going to double top or fail up here. And if it does, then that'd be the end of the move. And next one up is the Dow. The Dow made a high last quarter, dumped. Now it's going back up. If we don't make this could be a right shoulder forming on this rally. If it goes up here and rolls over, then that could be the end of the 15-year bull, 16-year bull. So you want to be careful there. Some of y'all are wanting to raise cash. It looks like it's too early for that, but uh, if it doesn't make a high, it rolls over, and you don't get out. That could be the last chance. That would be what's called a right shoulder. Here it is, long term. Long term George is still in the monthly Dow chart. So George, so so the monthly, the Dow just made a high. George is still in it. But if it's next time up, it makes an M or a lower high, George will sell it or short the Dow because he sees bananas way down there. So we're waiting to see if it can make a new high. It's more than halfway back up there. The relative strength's only 30, and it's also parabolic, so you want to be careful. It's real. Basically, what people don't want to understand is the money's been made in U.S. stocks. They should have been bought 15 years ago. They're parabolic. It's time to look for other areas that are undervalued. U.S. stocks are overvalued. Warren Buffett's selling, but people just want to fight it. Here's an inverse. You want a home run? Here's an inverse Dow coming in for a landing. The banana line's at 80. 84, the stock's at 27. This could almost triple when it returns the banana line. And you want to look for accumulation, Pat. Look at all this volume down here. Who's buying? Somebody's selling the crap out of it that bought it at 300. 324 was the high, but somebody's gobbling it up down here. So we go into recession. This thing's going to go to the banana line, and everybody's going to be shocked. But all this volume is telling you that. Actually, the relative strength. This is not a correct number. Relative strength's I think around 70 on this dog fund now. But we need it to start making a 52-week high and the 50-day to cross the 200 and all that stuff. It's a little bit early, but and Pat knows this N graph, N phase. Here's N phase. We traded this a bunch of times in the stage 2 bull a few years ago, and now it's in a stage 4 bear, and N phase is 200% below the banana line. So we're not buying it yet, and it's an individual company that can go broke, but it's good value there. So I think they might even make money, but it doesn't have any. The only thing good about it is it's cheap. Okay, that's enough of that stuff. Oh, any questions from you guys? I'll show you the NASDAQ 100. Going back to the last parabolic curve was 1999. That was called the internet bubble, probably before some of you. But stocks went parabolic. A lot of the companies didn't make any money. And Microsoft dropped, I think, around 80%. The whole NASDAQ dropped 85%. But you can see over here on the right, let me make it bigger. So we're in a similar situation here. It's parabolic, and it's hard to see on this 1999. It did go up, made a lower high, and then it collapsed. That doesn't look like a collapse, but that was over, I think it's 85% from the top. Devastation on your average stock. Pretty sure Cisco is still not back to that old high. I could pull it up here probably. Let's see. Anyway, see where it goes parabolic there. Here's Cisco coming up. It was a parabolic. This is classic. I remember one day it went up like 50 billion in a week, which was huge money back then. And I'll wait for it to come up. And it's still, so if you bought Cisco back there, you still haven't gotten your money back 25 years later. Yeah, you can see the parabolic. This is what Broadcom and those kind, Palantir, they're all doing this kind of curve. Anyway, any questions? That's all for today. Anybody still out there? At KCC? Got any questions for today? Well, thanks for showing up here. Let me show you Hertz real quick. So Hertz comes out. Everybody gave up on Hertz. Let's see. Yeah, and it broke out. Here's your stage 2 breakout. Resistance was 532. It broke out here on 366 million shares, like 9 times normal volume that week. So they get up too far and they have to fade back down. So we're waiting for it to correct this big move from the impulse wave started about 350, from 350 to 9, so it tripled on the impulse wave. So 2 steps up, now it's doing 1 step back on taking much longer. So Hertz is correcting, and then after correcting wave, it should do another impulse wave, which would be like this. So best case on Hertz would be once the correction's over, it would do another impulse wave like this. I'm not willing to bet that, but retesting the $9 high is a high probability. Let's see here. Yeah, so it'd be a up, down, up, something like that once this correction's over. So we're probably going to buy it this week on a buy signal, see what happens. When they go up on huge volume, they're going to go up again. KCC, it should retest the high, which is 950 or so. But first we got to wait for the correction to end, which is this downward. Yeah. Yeah. 2 steps up from 3 to 950, and then 1 step back, and then retest the high. Or basically, Hertz isn't going to come down until an M pattern. If it goes back up and makes an M, then time to get out quick. Yeah, this is the only reason smart money sells it up here at 950 is they know it's going to correct, so they're going to dip back in here and do it again. The reason the volume is so high, 9 times the normal, is smart money knows that, well, they're probably not going to go broke after all. So why wouldn't it go back to 20 or 28 like it was before? That's here the indecision. Are they going broke or not? A decision was made. It's not going broke, and so they jump in. Some guys don't care about timing. If they think it's going to 20, they don't care if they buy it at 9 or 6. They just buy it and check back in 2 years, and it could be up there again. But but that's why we don't do like Warren Buffett. Buffett would buy it. Yeah, your average mutual fund, they hold stuff for 3 to 5 years. And Warren Buffett would do that. We don't do it because people get bored and they want action here on the website. But yeah, we don't buy sideways because it's dead money. But you can make a ton of money. In 3 to 5 years, you could triple your money. You're not going to do that in the S&P. You'll be lucky to double your money in 15 years, the way the S&P is now. So this one, here's your base here. Anyway, that's all. Got anything else, KCC? Okay, well, that's all today. Got other things to do. We'll talk to you guys later. Oh, SoFi. Okay, hold on. SoFi went under the banana line, so it isn't a favorite. The best ones didn't come down, it didn't fall through. Longer term, I think it's fairly, well, it's not very old. This did what? SoFi broke out a nice base here at 1170, surged up, but when you break out the old support 1170, it should become support. It didn't. It fell through. So that's sort of inferior. It's not, and plus it's not anywhere near highs. So I'd be bagging that. Bagging. Don't let this thing roll over because it did not stay above the base, and it's like, for instance, the gold miners are overbought, but you really want to be in stocks that are making fresh new highs, pulling back. We're fixing to buy this week on a swing trade, and see if it can make a new high. If it doesn't, George sells it on M pattern, and there's not a lot of those to be found. That's the problem. But the VIX, this fear index, this is, people don't want to hear it, but this is a powerful wave up, correcting, and this thing could blow out next week, which would mean the market go down again. Usually when the VIX, when this one squirts up on fear, it collapses. The next thing, it's way down the lows, but this thing's holding up real well for some reason. And if it goes into a buy, we're going to buy, well, we're going to buy VXX, but this thing is holding up very well for whatever reason. HIMS is retesting. I think their earnings, somebody said, was Monday, but this one's, yeah, if these don't make highs, this was a darling. If it doesn't make a high or hood, or if any of these things we're in, they don't make highs, that's not a good sign for the market, period. So this one must make a high. Probably ain't going to happen. Hood's got to make a high. You know, hardly any stocks are probably going to make a high other than Palantir's trying, but it's the only really only darling left. Hood's doing trying. Yeah. Here's that's the problem I see is I'm always looking for new highs, and I'm really having a hard time finding them other than obscure stuff like the VIX or the inverse funds, or you know, it's not what y'all are used to. Let's see what GE, ones like GE's getting up there, but GE is also a, you know, possible double top. There's your banana line way down here. So anyway, so for instance, like GE is strong, but it could be an M pattern here, and George looks for banana hunts. So So George could be looking at a banana hunt on GE coming up if it fails. But there will always be something bottoming out. Let's see, we're waiting on RWM. Here's a daily. The RWM just made a high. See, KCC, you had your moving averages cross there. That's called a bull cross. This thing made a new high. Well, let's see if it's a real high. It's still in a base, so it's not really a real high. But it's stronger than the small caps are pathetically weak. Show you that. IWM. Yeah, so here's the small cap fund. It's having a corrective rally upward, and once the correction's over, it will probably go right back down again. There's no W there. There's a dead cat bounce off the low. It's pathetic. It can't even get to the banana line. So this thing's probably going to dump down again. Everybody's going to be shocked. That's the small caps. They're not participating in this rally. It's the same thing. It's the big. So what might happen is we might sell off again, and then if the small caps can make a higher low, that would be bullish, and then we could have a bigger rally up to way up because it is a good flush out. But following the rules on RWM, since it's down below bananas, you sell it on every rally. So when this rally's over, you short it, preferably up here, but this CRMT still weak. It's getting cheap. Let's see what the weekly. And it's undervalued, but that could be a W pattern there if you wanted to bottom fish it back to 80. But it's rolled over. It's in a stage 4 bear still. But it does. George sees opportunity on that. Possible if you bought on a W pattern, put a stop and see if it can make it back to 80. but we won't buy it because it doesn't have any relative strength. ALAB has broken it's broken the averages, and that's a talk about a stock that has nothing there. If you look at the fundamentals on that, yeah, ALAB is pitiful. Um, there's a reason ALAB went public. If you read the fundamentals, it's unbelievable the valuations on that thing. Let me find it here. ALAB's worth 12 billion. They're losing money. They have 440 employees, worth $12 billion. No money, yeah. 11 times book value. Yeah, people are going to lose so much money when that's a story stock. They might survive long term, but they went public not because they needed money. They went public to suck people so they could cash in on the stock. It was worth 17 billion a while back. Let's see. Yeah, it doesn't have much of a. I was looking at it to buy for top pick of the week, but it did fall through the. If it had bounced off the green line last month, or it could have gone back to the high, but it fell through, and it's still below the green line. So, but the biggest problem with that is they don't make money. There's nobody. It's a story stock, and that's how you can lose a ton of money. You can look back and say, why did I pay $12 billion for this little tiny company? Let's check here. That's you know, KCC. Here's a CRMT coming up, and it's the same thing. You need to get the 50 days across the green line, maybe above 59. Well, it depends on your style. We don't buy it until it's making a 52-week high. So it's just got too much work to do before. We don't want to buy stuff that has overhead supply. That's overhead supply. That means all these guys that bought it at 60 and 80, they're underwater. They want out. So they're your enemy. So buy stuff that there's no resistance. There's no overhead supply in the last year. You're just looking at them too early, but don't even consider them till the 50-day crosses the long-term average. Go look back, KCC, look back a year, and when there's people above you, that's your enemy. That's overhead supply. They want out. So every time it goes up, they're selling. And so the stock doesn't go anywhere because you got to get rid of all those guys. After a year, after they've all written it off for tax selling, then they're out. There's no resistance left. Got it? Okay, got to go here. Thanks y'all for coming. Bye.